Welcome to Multifamily Syndication Unscripted, a show that teaches investors the truth about multifamily real estate. Your hosts, Ben Leybovich, Sam Grooms, and Scott Hollister have more than 30 years of combined experience in real estate and finance. We are active multifamily syndicators and operators, providing you with detailed and cycle-appropriate content. Absolutely no fluff. So, if you want to be smarter about how and where you put your capital to work, listen up. You will learn what works in today's market conditions.
I'm here with my co-hosts, Sam Grooms and Scott Hollister. We've got about 30 years combined multifamily experience. Probably by now? What do you say, guys? About $30 million worth of transactional activity between us. So we're not the biggest players. We're still learning our ropes, but we have learned a few things, and so we're here to share. Now, allow me to take a moment, and we're not gonna take very long, but take a moment to introduce each one of us individually, and I'll go ahead and start with Sam.
Hi, my name is Sam Grooms. My background is a CPA. I switched over to real estate through flipping, started investing passively into syndications, and teamed up with Ben about a year and a half ago now, and we've now switched over to syndication side.
Very cool, and we focus on Phoenix. I'll mention that a little bit once I talk about myself. Scott's an interesting character, ladies and gents. He's done everything from private lending to buying subdivisions to buying multifamilies. I really don't understand how he does what he does, but he is Scott Hollister.
Thank you very much, Ben. I appreciate that. Yeah, jack of all trades, teacher to full-time real estate investor. Just trying to learn as much as I can and be a full-time student all the time. So I love being in the same room as Ben and Sam over here, and glad to this podcast talking about multifamily and syndication and what we learned along the way.
And my name is Ben Leybovich. I was trained as a violinist. I discovered I had multiple sclerosis in my, I think it was first year master degree. The story is pretty well known. I've been on about a bajillion podcasts talking about this, so I don't want to take any time to talk about it. If you'd like to learn more about how that went down, which may be interesting or motivational or inspirational to some of you, please visit my website. Aside from that, what I do is I started with single family, figured out that doesn't work so good, went to small multifamily, figured out that was boring, and I syndicate apartments, and I teamed up with Sam, and we focus on Phoenix MSA. And we currently have about, what do you think, Sam, about $20 million under management in Phoenix? Yep, by purchase price. Who knows what that is by market cap after the repositioning and all that stuff. And that's a little bit about who we are. We're not the biggest player. We're very active players, however, and we're here to share all of the details, so to speak. But we'll hold off and we'll get into that in a little bit. Let's talk about this podcast. And again, this is the first show. This is the introduction show. So we're not actually going to get into the content that we're here to deliver. But just to give you a bird's eye view on what to expect from this show. What this podcast is about exclusively is about multifamily, large multifamily, the underwriting, and the deal structure. So we intend for this to be a highly educational show. We're not here to motivate you. We're not here to do push-ups and high fives. We're here to really, really dig into the subject matter piece by piece and deep dive kind of shows. So meat and potatoes, okay? Very detailed, very high-level ideas, very high-level lingo. Are we going to stop and explain simple concepts? No, we're not. This is meant to be a show for folks that are very familiar with real estate as it is, and would like to either figure out how to be more efficient effective, and better at placing their capital. So high net worth individuals, accredited investors, who are interested in knowing how to deconstruct the gazillion of pro formas that they receive every day and try to figure out which one is the better one to put money into. So this show is for those folks. The show is also for the folks that, for a lack of better way of describing it, want to be us. The folks that are experienced at real estate, want to grow their business, want to be more exponential about how they grow their business, and need to understand kind of certain formulas and dynamics of how this is done in real estate, how you can take your single family business to multifamily, to large multifamily. There's a lot of technique involved. And so for you, the show is also appropriate. If you're a newbie, probably, and we don't want to be exclusionary in things, but if you're going to get lost, you're likely going to get frustrated. And if you're going to get frustrated, we don't want you to. So there are a plethora of shows out there that'll focus on the basics. This isn't one of them. We mean for this to be a very, very advanced podcast, okay? Speaking to not everyone, but a few. Since there are so many podcasts today, since it's so commonplace, perhaps the best way to explain what we have in mind here is to juxtapose against other shows. What we see, and if you listen to real estate podcasts, what you see is that the majority of them are based in a format which is built around interviewing people. We're not going to go there. This isn't what we have in mind. Why not? Well, the way we see it, and I don't know, Sam and Scott, if you agree or disagree with me, but the way we see it, there are kind of three unfortunate side effects to that format. First of all, there's too much information, and all of it tends to get kind of unfocused. So there's a difference between, Warren Buffett is the famous investor, the proponent of focus investing, right? Which basically says if you see a really good opportunity, you allocate extraordinarily large portion of your resources toward that opportunity. If you are right, you're going to win really big. If you're wrong, you're going to lose really big. But how that's different from diversification is that diversification, you lose over here, you win over there. You're diversifying your risk. By doing that, you can't really outperform the market by that much. Well, if you translate that into podcasting, what folks are doing is they're bringing on all these guests, and they're introducing you to a billion different ways of doing things, which is really great for motivating, but it's highly unfocused. And so it's very easy to get lost. I try this, I'll try that, I'll try the other. We don't want to do that. This show is about large multifamily syndication. And so we're not going to bring on a guest every week and talk about their way of doing it. We have a way of doing it. And we want to teach you what we've learned over, in my case, 13 years of doing this. And hopefully it works for you. And if it doesn't, I understand. You go find some other way. But I think that focusing our thoughts on one methodology, one approach, something that works. And by the way, there's an important point. We're doing this right now. This isn't a show about what we did. This isn't a show about how we bought in 2013 and how things worked out very well. This is a show about how we're buying today, what's working today, right? So that's one reason we kind of don't want to do an interview-based show, is because we don't want to overload you with a billion different ways of looking at things. We just want to train you the right way in one way of looking at things. If it works for you, great. If it doesn't, great. Now, the other side effect of interview-based shows is the reality is very simple. Real estate is not new. What we do is highly complex at this point, but it's not new. It's been done. So instead of restating, because if you start a show, if you start every interview from the beginning, then you end up going over the same stuff all over again. So there's too much repetition, and that means that you don't really dive in very deep on any single subject, which is the opposite of what we want. We want to be taking deep dives in every show on one specific topic. And we want it to be a logical progression that if you listen to us for a couple of years, you will really, really, really understand the big picture and the small details. You may not discover that you have a desire to do it. You may discover the opposite, that you don't have a desire to do it, but you will certainly be well equipped with a lot of the details. So that's why, we were building the show more as an educational show, picture round table with the three of us. We may, from time to time, invite someone to co-host. It's probably not going to be for a single show. The format of this podcast is going to be that we'll be releasing all of the shows one season at a time. So you guys can really enjoy the logical progression of the topics. We'll pre-record all of the shows, and maybe there's going to be 10 or 12 shows in each season, and we'll release one season at a time. Well, we may elect to invite a co-host, a fourth person to sit at the table for the entire season. But it's not going to be an interview type format. Okay, so I think it's fair to say, I mean, the difference real estate has made in all of our lives. I think it's fair to say we're passionate about the impact real estate can have, but I think it's also fair to say we don't want to motivate you. We will let gurus do it. We will let other podcasts, frankly, do it. If you need motivation, you're not ready for this show. We want to teach you. We want to cause you to think. We want to challenge your assumptions. A lot of misinformation out there, a lot of bad information out there. With all due respect to all of the gazillion podcasts that are out there, I don't know, Scott and Sam, I don't know if you're willing to put your neck on the block and say there's a lot of bad information out there, but in my opinion, there's a lot of bad, at the very least, incomplete in terms of perspective, information out there. So I don't want to motivate people. I've got too much money to be sitting here and motivating people. I want to teach. I want to be speaking to people who appreciate the finer thoughts around this subject matter. And if it turns out that in this podcast we cannot do that, then we'll discontinue the podcast, because I'm not going to be sitting anywhere if I'm not enjoying myself. And the only way I'm going to enjoy myself, guys, is if we have very serious, very advanced, thought-provoking conversations around this subject. So please expect heavy-duty information. Please expect absolutely no fluff. We're not going to do fluff. There's just not going to be any of that stuff. We're not going to do hoorays. We're not going to do high fives. We're not going to do push-ups and get our heart rates up. We're not going to talk about how wonderful real estate is. In fact, you'll hear me say probably on more than one occasion, real estate freaking sucks, dude. I don't like it. And I've said it on every podcast I've ever gone on. I don't like it. A lot of it is dirty. A lot of it is messy. A lot of it is heartache and ulcers and all the rest of it. It's, if you take a fiduciary, especially when you start taking people's money, if you take your fiduciary responsibility seriously, as you should, I don't like it. I don't like real estate. It's stressful as hell, but it's powerful. And that's why we're here, because it's powerful. So again, who is this for? For accredited investors looking for exact and detailed knowledge to be able to break down and reverse engineer the opportunities They're looking at to be able to isolate the good ones. That's for you. This show is for you, the accredited investor, somebody looking to place capital. If you are a very sophisticated operator and you are trying to figure out how to jump from that single family and small multifamily into a large space, how to attract capital, how to structure investment opportunities, how to jump into the syndication world, this show is for you. You will learn a lot. You won't learn everything. And, frankly, in the podcast format, we can't possibly teach everything, but you will learn enough to cause your thought to move in the right direction. And unfortunately, who the show is not for is probably newbies. I suppose you can find motivation in, listening to three guys that started where you are right now and that are on another level today. Of course, that's probably motivating for some of you. And I don't want to discourage you. All I'm saying is that I will not be answering emails asking me what a cap rate is, although we're going to do a show on the cap rate, because cap rate is not at all what everybody thinks it is. But I will simply not bother myself. And I know I sound very pretentious in saying that, but guys, the benefit, the payoff, I should say, of a job well done and the blood and sweat and tears, the payoff is that the three of us, and Sam and Scott, correct me if I'm wrong, the three of us do exactly what we want, when we want, with who we want. And we don't do anything but that. And that's what life is about. And when everybody talks about financial freedom and financial success, I think that is at the root of what that really looks like. That you find yourself with people, that I find myself with people whom I like, I respect, whose company I enjoy. And I make it a point to only do those things that I really truly want to do, the things that give me pleasure on some deep level. Okay. I think that's what life is about. And I think that's why we work as hard as we work. So, if that is motivational, as I'm sure it is, of course, you may enjoy the show even if you are a total newbie. However, you may get lost in a lot of this content. You may get lost because, unlike so many other podcasts, we're not going back to the beginning on every episode. We're starting very high up to begin with, and we're building much, much higher. So stretch yourself by all means, but just have realistic expectation that you may need supplemental education, supplemental perspective in order to really be able to digest and internalize this particular podcast. This is all that I wanted to share in the first episode. I'm going to pass it over to Sam and Scott for their thoughts. In the next show, the second episode, we're going to start with the actual perspective on syndication, what it is, what multifamily is, how we look at it. Think in terms of big, a pyramid on its tip, turned over on its tip, and we start with very generalized kind of information perspective, and then we funnel everything down into the specifics. So starting on show 2, we're going to begin that process. Guys, anybody?
So I think the biggest thing you pointed out was we're not going to have repetition. So we might explain something on the first time. The first time we say an acronym, we'll give an explanation, and then we move on. Next time we talk about that, we're going to assume you've listened to prior podcasts and that they're building on the previous one. And so we're not going to go back and explain it again. And I think that's the biggest benefit and will allow us to go deeper into the content rather than just repeating the same stuff over and over. I think that's going to be the biggest distinguishing factor between this and other podcasts.
Yeah, my big takeaway, Ben, and you touched on it. What I really like is, coming from a former teacher, is learning from someone that's not only in the thick of things but has a little bit of experience. And I think that's the most important part, that you guys have just closed on, a few syndications. That knowledge is so fresh in your head. It's so readily available to share to others. And I really love that, because that gives us, a hands-on approach. You're in the thick of things. You're doing it daily. So before we get into a few other topics, just from you explaining, Ben, I kind of want to dive into a little bit about, partnerships in your first deal. So before we get into the first deal, how did you guys end up meeting, and, why is syndication a team sport? And then what, attributes did you both have that kind of, allowed you two to come together?
Well, for me, and this is like why we're here, why I am here, because I like you guys and I respect you guys, and you motivate me and inspire me. So the way we first met, Sam and I, is I was putting together a deal which didn't materialize. I think, Sam, we can now say, fortunately, didn't materialize, right?
Yes.
But we met through that deal. Sam was going to put some money into that deal, but where he really piqued my interest is that he found a discrepancy in my underwriting. And the way that he did it, I gave him the same thing I give to everybody, which is the offering memorandum, which was a PDF file. So this guy deconstructs my PDF, builds a spreadsheet, reverse engineers my spreadsheet to find a discrepancy in one of the line items.
I think it's clear. I wasn't deconstructing it to find the discrepancy. It was a byproduct of me deconstructing it.
Yeah, and byproduct of you being an anal, obsessive CPA with SEC reporting background with Deloitte pedigree. That's what it's background of. But the fact of it is that I was a little I was grateful, because it's good to know when you've made a mistake, but I was shocked and immediately attracted to this guy, because we were talking about very complex things that take forever to figure out, and all of a sudden this guy comes out of nowhere and finds a mistake in my underwriting, and I'm thinking, what the hell? Where's this guy come from? So that's where immediately the relationship started, just because I became intrigued. Who does that, right? And since then I've found out that Sam is my kind of, I see him as a laptop for a head, and then a neck, and then legs, and he just walks around. But he's a computer, like a human computer, like the way he processes numbers. I've just never seen that before. Like for me, I start out with stories and pictures and everything else and boil things down to numbers. And I think for normal human beings, that's the way it works. For Sam, numbers are his pictures and stories. He just goes straight to the numbers. It's amazing how his brain works. But the way we hooked up was that deal that never materialized, that we were actually introduced by Brandon Turner of Bigger Pockets. He's a really good friend of mine. And I'm not sure how Sam knew to get hold of me, but it was through Brandon. How did you know to get hold of me?
Brandon had actually mentioned it, that he was investing in a deal here in Arizona, and I had invested in other syndications before, and all of them were locally. And so I wanted to see who else was putting a deal together, and I actually didn't know it was you. And he just said that he was investing in a deal here. So when I reached out to him to ask who was putting the deal together, he put us in contact.
Right. So that's how we got together. That's and then when the deal fell apart due to nothing I did, just circumstances were not right and things didn't go through. Sam and I just kind of kept in touch, and one thing led to another. And
I think we immediately realized we brought different skills to the table. And I think that's good for partnerships. You don't want someone who just does the exact same thing you do. You want someone to complement you. And just time-wise, not everybody has the time to do everything that's needed in a syndication. And it's good to have someone there that you can rely on to.
We just closed in 30 days. I mean, that's a whole another story, right? We just closed an $11 million deal in 30 days. I mean, most people can't even close a freaking house in 30 days. We closed this thing, and if I had to do it myself, just forget it. Just as much as, between the debt and the equity, as much that needs to be done, forget it. Maybe I could, but I would hate my life. I wouldn't want to. That's the whole point. And that's why this partnership works.
Well, that's great. So what other, attributes do you bring to the table? So we have the financial background, the analytical mind, is there a raising capital side? Is there a teamwork side? Is there a good people person side? What other skills do you think you need?
I think we'll dig into it. And this may be a little cryptic for now. For people to understand. But even the underwriting, so we do the underwriting together. But even as far as the underwriting is concerned, our models are a little bit different. Our starting point is on the opposite end of the stick. And then we underwrite, and then we marry or merge or synergize those perspectives, which is really helpful because we're not... I think it's what allows us to be highly competitive in a highly competitive market. I mean, Phoenix is a highly desirable market. A lot of people want to be in Phoenix, and I know for a fact a lot of people can't figure out a way into Phoenix. And I think the thing that allows us to be successful, to have found a perspective on this market, is due to this kind of idea that we underwrite differently, but that captures slightly different dynamics from a slightly different angle. So by the time you merge those together, you are discovering, I think, a truer perspective on the numbers. And we're able to be more dialed in with our underwriting because partially of that. But the reason our underwriting is a little bit different from one another is not because the point we want to arrive is different. It's because our minds work differently. And as I already alluded to, and what's underwriting? Underwriting is simply putting into numbers the dynamics that you can see in your mind's eye unfolding with XYZ property. How is it going to happen? When is it going to happen? Why is it going to happen? What's going to happen? Well, we've got two guys that think about things a little bit, think about the process, the dynamics, a little bit different. And our underwriting reflects that. And so we're able to juxtapose that and challenge each other and find a good middle ground. That's very helpful. And so it starts there. So like the differences, I think, between us and the similarities and the benefits of those differences start right there, right at the outset with the underwriting. And of course, yes, I do most of the fundraising. Sam does talk. I mean, I can't talk to bankers to save my freaking life. I can't do it. I can't do it. I tried it. I can't do it. I think I was on the first. Was I even on the first call? I think I was on the first call on this deal. That's it.
On this deal, I'm not sure that you were. I know obviously on the first deal you were, but on this last one.
I just, he handles the bankers. He handles the attorneys. I will call the SEC people once in a while if I have a specific question. But like paperwork, procedural stuff, I mean, I know what's going on. I'm just not in the middle of it.
And that's a good, Scott, your question originally was qualities that for this space, what else do you need to have? And I think organization is a really big one that you need to have. We'll get into it later when we talk about financing in another episode, but the bankers, they give you a list of 150 documents that you're going to need to have into them before closing. And they're very specific, and you just need to have all of that organized, what you have and what you've given to them, and what you haven't. And like if you were doing it in 30 days, you definitely need to have those skills.
Mm-hmm. Absolutely. And if it was up to me, forget it.
So what advice would you give yourself if you two were just starting over meeting for the first time?
I don't really think, I mean, like all of these things, all of the ways in which we complement each other are important, but let's not kid each other. The reason we work well together is because we like each other and we trust each other. Yes, we would be friends, not partners, if we didn't have complementary skills or the same idea about what we want to do in real estate and where we want to go. We'd still be friends though. So that's where it starts. I don't have to worry about him stabbing me in the back. At least that's what I believe. And, you know, the future will tell, obviously, but if you can't believe that way, your partnership is dead before it starts. So, you know, you have to, again, it's coming back to what I started with. You have to be inspired by the people you're with, and you have to trust the people you're with, and you have to like and enjoy their presence. Start there. Don't look for a complementary set of skills. Start there, because you're going to hate your life if you're around people that get the job done but don't give you pleasure in your life.
And that's a good point. If you don't want to work with a person that you're partnering with, then you're not going to want to work. And you're going to need to work a whole lot to make it in this business.
For sure. Now, it sounds like you both started some background, simple single families, small multifamilies, and then going into syndication. So what was the big learning point, from closing a small deal to a large multi-million-dollar syndication?
Actually, with this, we're probably infringing on the second show territory, because we're talking about cash flow versus capital gains in this. And I think it's probably, it needs to be better set up. So I think this might be a good place to stop, actually, the first show, and to transition into the second. Because we're ready to talk about some of the structural components and the perspective on the structural components. Because maybe real estate and cash flow and equity, maybe it's not exactly what we think it is. And we have to have that discussion. And that's a discussion, I think, for the next show. So take us out of this thing, Scott.
Sounds great. Well, I'm Scott Hollister, your co-host with the Unscripted Multifamily Syndication Show, if that's our title we're choosing. Sam and Ben, appreciate you on. And let's wrap things up, and we'll go into our second episode.
Thanks. See you next time.
Talk to you soon, guys.
Thanks so much for listening to this episode of Multifamily Syndication Unscripted with your hosts, Ben, Sam, and Scott. If you enjoyed today's episode, please leave a review and subscribe, and we'll catch you next time on Multifamily Syndication Unscripted.